Welcome to Steve Savant's Money, the name of the game. Hi everyone, I'm your host, Steve Savant, syndicated financial columnist and money gamer extraordinaire. Today we're talking about the life insurance settlement options for seniors with life settlement experts, Erez Ratam and Alex Sorokin from Integrity Life Solutions, LLC. Well, welcome to the show, guys.
Thank you.
Appreciate it. Well, you know, when we're talking about it, we're always looking for options for our seniors. Retirement modeling is huge right now. And I've noticed that some of our seniors keep saying, Steve, as much as if I'm trying to get money out of my 401k, I'm trying to get money from Social Security, and I have other needs, maybe long-term care, I might have medical expenses. I have to find another place to get some cash. And when I heard about this idea of life settlements, where you can actually take a life insurance policy that really maybe doesn't have any purpose any longer, that could actually be turned into hard cash. I think to consumers, this is a surprise.
Actually, the word surprise is perfect, Steve, because most people, and in our dealings, and we deal with a lot of people, most people in the public have never even heard about this concept. And if they have heard about it, they are confused about it. So let me, if I might, explain quickly what this is. A life settlement is the purchase, typically from a third-party investor, of a life insurance policy. The investor becomes the owner and the beneficiary of the policy, pays a lump sum payment of cash to that previous policy owner, and the insured, who still might be that same policy owner, might be someone else, the person on whose life this policy is written, remains the insured through probably that person's life. The idea is that you are taking an amount of money that is paid to the policy owner that has to be greater than the cash surrender value. Policies may have and may not have a cash surrender value in that policy. If it's permanent, it may have a cash surrender value. If it is a term policy, which also applies to this concept, possibly, there's no cash surrender value. But the key is that the offer that is made by the investor must be greater than that cash surrender value. Otherwise, the offer is meaningless.
Now, when you're looking at this, Erez, I'm looking at, this is an option that I think most of our seniors don't even know about. And here's an area where I could actually generate some cash from maybe a piece of paper that says life insurance on it that is doing me no good.
Right. I mean, people need money today, and they need to pay for home care. People want to stay in their home. They want to pay for assisted living facilities. Where is this money coming from? They need a source of money, and life insurance is a great source of money that they might not have thought of before. Now,
I'm assuming that mom and dad, in my senior example, are cluing in their beneficiaries that they're going to sell this policy for cash. Most of the time, most of the providers are going to have to talk to the beneficiaries as well as the policy owner?
That's right. Usually the beneficiaries are required to sign off on this. And by the way, we're not saying that life insurance is a bad thing for some people. Life insurance, people want to leave a legacy to their children. But in our opinion, before you leave a legacy, take care of yourself first. And if you ask your children, most children are good, I think, and they'll say, yes, we don't really care about this life insurance. As much as you want to leave a legacy, we don't care about this life insurance policy. We want to take care of you, mom or dad, and take care of your financial needs first.
Now, Erez, I've noticed that this is based a lot on how long they think the senior is going to live. So kind of give me an idea what you're looking for. What's a typical settlement looking for as far as lifespan?
Generally, we're looking for people who have 10 years or less to live, but I would say don't decide yourself whether you have 10 years or less to live. Ask the experts, give us a call. We'll look at your medical records. We'll send the medical records to our doctors, and they'll help us figure out what we think the life expectancy is.
Okay, so they're going to collect the policy. They're going to maybe get an in-force ledger, a statement from the company where the status is on the actual contract, and then we're going to collect our attending physician statements from our doctor, and then we're going to hand a file over that. Now, I'm assuming we have to sign a HIPAA agreement on this.
Of course.
Okay. And Steve, just to be clear, they don't have to get that information themselves. They could sign our paperwork, and we could get it for them. We can call their doctor. We can call the insurance company. We'll take it out of their hand because we don't want to burden them with the time and effort it takes to collect all this information.
And I think I'm sorry to interrupt, but I think an important point is that this cost a policy owner nothing. All of the costs, if there are any costs to get medical records or policy information, are borne by us. And there is no commitment made. The only downside to any particular policy owner or family really is that you're giving us the ability to gather personal information, and we are required by law to treat that information confidentially, and of course we do. And if we make an offer, and sometimes we can't, but if we make an offer, the person to whom we offer is free to reject it and say no, and then nothing ventured, nothing gained. There's no cost to finding out what the value is of this policy.
When we come back, we're going to talk more about life settlements as an option for seniors and how it can really work for you if you need cash. We'll be right back after the break.
Take a close look at your hard-earned dollar. How do you think your money's doing? Are you keeping an eye on it? Is it protected from taxes, inflation, and market risk? Over time, those Washingtons could become Franklins. With tax-advantaged indexed universal life, from one of the largest distributors of indexed universal life, Ash Brokerage.
Welcome back to our second segment. Of course, we're with Alex and Erez. They're walking us through this new, it's really not a new concept, but for most consumers, we've never heard about it, using your life insurance policy and seeing what the value might be in the life settlement market. When we're talking about the life settlement market, I really like that idea that you do all the collection, you do all the work, we don't have any money out of our hand, out of the pocket of the consumer. The consumer finds out what the market is going to bear for their life insurance contract, providing that they don't need it, they don't want to leave a legacy, as you said. And so when I have that, I'm all ready to go. I've handed that to you. I'm a consumer. How long before I know what kind of offer am I going to get? And once I get that offer, what's the process after I've said yes? How long does that take?
Well, generally, Steve, the offer, after all of that information is collected and in our hands, it's really a matter of simple analysis on our part. Probably can have an offer back within a day or 2 days. And if the offer is accepted at that point, then we will send out contracts for signature to the insured, to the policy owner, maybe the same person, depending. Sometimes to the beneficiaries. If there's a trust involved, that's okay. We can we can buy a policy from a trust. By the way, we look at any size policy, even anything as low as $10,000 in face amount. Any type of policy. Don't assume that just because it's a term policy, it can't be sold. So we can have an answer very quickly. It takes, we like to say, between 30 and 45 days thereafter to finally close. And there are, and I think it's important for your viewers to understand that there are built-in safeguards. If we are to purchase a policy from someone, the contracts that are employed are approved contracts by the state in which the policy resides, and there is an escrow agent for the protection of the policy owner, so that while the changes are being made at the carrier, that is, the carrier is going to change ownership and beneficiary status at their level. While that's going on, the money is sitting in an escrow account waiting to be delivered once notification received back from the carrier that those changes have been made. So this is a safe process, and it is a relatively quick process if done properly.
Now, I think I just heard you say it can go all the way down to $10,000 of death benefit amount. Is that correct? Did I hear you say that?
Right. We look at small face policies. We don't limit ourselves. So we'll look at $10,000 to about $1 million of face amount, which is very unusual for the market.
It is. That's why it caught my ear. Now, going down that road for our clients that are maybe in the 50,000, because there's so many clients that have bought maybe burial insurance. Maybe they bought a basic policy for their kids, or transition for medical expenses and whatever they bought it for. There is a huge market of that 100,000 on down. So I have never heard a settlement fund, as you've explained, go down that low. So if you're looking at our show and you say, Steve, I have a couple of these policies, I'd like to know what it is on the open market. It'd be nice to know what that number is. Right. We could do that.
Absolutely. No fee, no obligation.
Okay. Now, when we're talking about this, I have to come to the place. I'm the client. I have my policy. You gave me an offer. I accepted the offer. We've went through the due diligence process. Everything went great. I received my money. What if I wanted to go back and buy an additional life insurance contract? Could I actually do that after I've given away this contract or sold it?
There's nothing legally that prevents you from using that money for anything that you want. You can buy a life insurance contract. I'm going to say something in a minute, You can buy a life insurance contract. You can buy an annuity. You can buy a trip to Paris if you like. But I mean, it's from a practical point of view. If you're qualifying for a life settlement, and the buyer generally looks at the health of someone, it might be likely that it'll be difficult to qualify for insurance. So seller, beware that you are selling a life insurance policy, and you may not be able to get another life insurance policy. So we're not afraid to be open and honest about that.
All right, so if we declare that and we make sure that everybody knows that this is what you're getting into, this kind of reminds me, having an option like this is a great backstop to a retirement plan. If your retirement account seems to be depleting, if the actual Social Security isn't having its inflation adjusted, it's not catching up with inflation, and I need some cash, this could be an excellent backstop for a senior to have in their portfolio so that they can have this in case they need it, especially for what you said, Erez. I mean, we're living longer. We're going to have probably some kind of assisted living need, whether it's in-house or in a nursing home. I'm going to have that expense load, and I think it's really great to have this kind of as a backstop.
Right.
Yeah.
Well, that's our show for today. I want to thank Ezra Rotem and Alex Sorokin for being my special guest and today's Money Mentor. And before moving forward with any of the ideas on the show, always consult your tax advisor or legal counsel. And as the good Reverend John Wesley once said, make all you can, save all you can, give all you can. I'm Steve Savant. See you next week.